everyone. It's Liz from the Barletta team at Ligris, and I'm so excited to have Amy Wortzman today with me from Eastern Bank. Hi, Amy.
Good morning, everyone. Fun to be here.
Yay! So Amy and I go way back. I don't even want to count the years, but
50 plus, I think. Yeah.
yeah, it's been a while. It's been a while. And you are always the person. Well, first, maybe let's take a step back. If you want to kind of give a bio, like how you got into the mortgage industry, how you found yourself at Eastern Bank, and all that fun stuff.
Absolutely. So, fun story. After I graduated college, I started to train up under a woman who was Dominican at Wells Fargo Financial up in Methuen, and she was going on maternity leave. So, I started to learn about using my Spanish ability in a financial setting. And so, all of a sudden, I was helping with like car loans, furniture loans, and doing all these things. And then I got a call from actually a sorority sister who said, "Hey, I'm working at this mortgage company. We need a Spanish speaker." And long story fast, we just forward and I got into this track of residential lending. And very candidly, when I first got into lending, I wasn't doing the kind of loans and the work that I do today. And in some ways, I want to be upfront with everyone. This ended up being like a calling, something I really fell in love with as my career evolved. Because when you speak Spanish and English and you work with many cultures and languages, you start to see different cases. And
Mhm.
candidly, everybody had something unique. And what I found was a lot of my clients needed resources.
Right.
So organically, I started to seek out these programs and resources. So here's a fun story. In 2008, 2010, I worked at Eastern Bank. And then I went off into mortgage company space and I've worked for some big banks and some local mortgage companies. And again, this is one of those things where things push you forward. I went to First Republic for a minute and I was going to work on what you call CRA, low moderate income lending. It was a glorious 4 months. And
Mhm.
we laugh because unfortunately the bank failed, but that ended up pushing me in a direction where I landed at Eastern Bank. So for me, it's a little bit of coming back home
Yeah.
and bringing that expertise of, like you said, almost 15 plus years from the streets in the products to a place that has the model and the mission to work on these loans. So that's sort of a really big summary of 20 years. How did I get here?
Yeah.
Why do I do the work I do? And then, through your partnership, we work on what we call sort of that loan magic, making these harder loans and files still feel good to the client,
Yeah.
still have that great expertise and experience. Because you and I
Absolutely.
both know we want that closing table to be a
So
celebration.
happy, excited, accomplished, because especially these loans and these particular scenarios that you work on are super challenging. Like it's not for the faint of heart. It's not someone who doesn't feel called to it because there is so much more work behind the scenes that you have to go through to get the file to clear to close. And actually, I think I did meet you when you were at Eastern. So it is
Probably,
what,
right?
the full circle moment, which is so cool.
Under my still mentor Gonzalo Puigbo, who
Oh,
is
yeah.
great to help me grow, and sharing this with people out there. Finding mentors that really align with you is life changing. I mean, I was a sort of bright eyed, bushy tailed, like knowing I wanted to do good things, but didn't have the technicals yet. And
Yeah.
I'll never forget, I had finally a Venezuelan Spanish speaking mentor in the mortgage industry who said these things to me. Number one, I knew you were trainable. And number
Mhm.
two, I knew you had a heart. And I'm just going to be blunt with everyone. We're talking openly. Some people are really transaction driven in the mortgage industry.
Right.
And I get it. There's lots of different incentives and things and models. But when you narrow it down, like you said, to this work, the complexities of it, it's still a huge access point for that first time home buyer. That's where I focus a lot. First time home buyer, first generation. These are words you start to hear in the banking space, and we'll get into sort of what can you layer in with these words and product wise. But like you said, not everybody does it. So that's a huge reason why you and I wanted to come together today to help people. We respect all of your lending relationships. I've been there, never trying to step on something that's working for you. What I am trying to add and bring awareness to are the products that are candidly so nichey in the
Right.
broader context of mortgage lending that if you don't know they exist and you're trying to serve your clients and community, I think it's a little bit of a disservice. So we all want to try to advocate together because, again, there are programs that I've seen you may not be able to do candidly at a mortgage company. There's either
Right.
they don't have them or the way you have to do the loan doesn't work. And I'll touch on that later. And so there may be a bucket over here where we can still say yes. And so, we'll get into that in just a few.
Yeah. So, and you are the person, whenever I have a realtor asking me, I have this first time home buyer, they've heard about maybe down payment assistance. I don't know what that is. I don't know how to take advantage of it. It's like, talk to Amy.
Right,
Talk to
right.
Amy. And so can you maybe kind of explain sort of the different avenues that you take a client through to see what program is the best for them?
100%. I tell people when I teach first-time home buyers, think of a dartboard for just a minute. You have that bullseye in the middle. It's small, but it's the best. And when I think about the product Mass Housing Partnership, which on the street is called MHP or the One or the Old Soft Second, it's morphed over the years. This product, it's actually why I came back to the banking model. I wanted access. Existentially and professionally, I needed to work with this product because it's a subsidized interest rate. It's a low down payment. It does not have any PMI. And now here's the thing, you're working a little bit more conservative ratios than, say, an FHA loan or maybe some conventional. But when you don't have PMI and you have a lower rate, it kind of balances out. And you look at
Right.
the long term for the client, that loan is cheaper in the long run. Now, what's really cool about the Mass Housing Partnership product, it has enhancements. So depending on where you're buying, and I'll talk about that in just a second, but this product, that bullseye, it's only offered by depository banks.
Hmm.
So let's be real. If you don't have the product, you're not talking about it.
Right.
And I'm the first one to admit I was never talking about this product when I worked at a mortgage company
Right.
because I didn't have it in my toolkit.
Right.
Now, this product, it's what you call a manual underwrite. I share that technical moment with you because it means I'm not using a computer software like Desktop Underwriter, which is DU, or Loan Prospectus LP, which these are all called automatic underwrites, which have to give you something called an approved eligible reading. Literally, you're putting information into a software, it reviews the overlays of risk and says yes or no.
Right.
Now, the reason I'm sharing this with you is there's so many loans that you try to put through, and these little findings don't work. It may
Right.
not like this, it may not do this. And I've seen loans that just don't pop.
Right.
And so that was when someone might hear a no. But here's the beauty of MHP. It's kind of old school, old fashioned. You fill in a little data boxes. If it fits, it works. That's it.
Right.
Can take it down to a 640 credit score. That's huge in the world of lending. You're not seeing the penalties for the lower FICO score.
Right.
So for realtors, if you hear of a borrower that says, I'm only getting an FHA pre-approval, with all due respect, let's take a look. We
Right.
all know that FHA appraisal is viewed more rigid than the conventional. We want to leverage that possibility to be a better offer,
And
right? How do
even
we
though
tie
this
that into
is,
the realtors?
and in this particular program, it wouldn't be an FHA loan. It's not an FHA loan. It would be a
Conventional.
conventional product.
100%. So MHP follows Fannie all the way. It does allow us to use a Freddie Mac guideline on student loans, which is super
Oh, cool.
advantageous. But again, like I said, that 640, we work the ratios. And here's what I want to share with everyone. If you are buying in Boston right now, let's talk about Boston. There's three different buckets for down payment assistance, rate reduction, and closing cost money. As of today, this is so hot in the news is they
Right.
have adjustments happening. And let me just share quickly what that is. If you are buying an affordable unit, meaning you are in a lottery or a resale, you can now apply for 2% down payment assistance, funds for closing, and you're still going to get either a 1 or 2% rate reduction
Wow.
if you meet the product.
So
Now, the
not just
product.
one. It's not like you're picking one. You can apply for all and
Right,
potentially get them.
depending where you're going. So we
Right.
might work pre-approvals very differently in Boston, out of Boston. Those are the big buckets. And then, of course, first generation, which we'll talk about in a moment. But with this MHP Boston One Plus, on that affordable unit, if you're 80% area median income, you're getting a 2% rate reduction. To give you a real number, that's 4.5% on a 30-year fix with no PMI. If that
Amazing.
client, let's talk, right, liquidity. People don't have a lot of cash right now.
Right.
they say to you, "Oh, I want to buy a house. I don't have a lot of money." If they look at a lottery, they only need 3%. So the lottery side says they have to put in 1.5%. I come in with two. I've got funds for closing and a rate reduction. We tied that up with a bow. So
Amazing.
that's what you and I talk
Amazing.
about,
Yeah.
getting people in. If they have the income, we can work it, right? We can find the liquidity. Now, in Boston proper, they're going to shift down payment assistance if you're not buying an affordable unit. So if you're buying a market rate, we're going to look at your income level. You will get either 2 or 3%, but you will also get funds for closing and a rate reduction. So Boston is its own cool market, has its
Yeah.
own enhancement. And for realtors out there, just be mindful if, like, all of a sudden, I use this example all the time, East Boston is Boston, Chelsea is not. So
Right.
that product doesn't carry over the bridge. We got to
Right.
rework that.
Right.
Okay. Now, also in this bucket, which is super fun, we have the new Mass Housing One Plus, excuse me, Mass Housing Partnership One Plus, MHP One
Okay.
Plus. If you're living in one of 29 communities, now remember, I didn't say buying, I said living, renting in one of 29 communities, and you fit into this box, you can get down payment assistance, a 1% rate reduction, and funds for closing.
Wow.
That's huge. It's
So it
huge.
has
I've
no,
literally seen
you could
that
be,
change pre-approvals.
and so you could be buying, let's say you are living in, Southie,
Yeah,
but you want to go to the suburbs. You're
correct.
living in the neighborhood, but you're
Right,
buying outside of it and you can still
right.
potentially qualify.
Right. And that's a change for the marketplace because we used to be so
Right.
focused on where are you buying? Because
Right.
we're focused on where are you buying when we look at income limits, right? And certain products like we just talked about for Boston. But this enhancement is intended to drive the cash to help get us over the hump. Because really the hump is I don't have the money for down payment,
Right.
closing, and all these things. And so you just start to fill it in. One of the things everyone knows I love to do, I get super competitive now about not the loan size, but what I call that initial equity. How do you push the loan down? And if you push that loan down through stacking these resources, it's super cool. So I'll just share with you, like, if let's pretend we have someone who's like our person living in Boston,
Yeah.
buying in the suburbs. Um, we're using MHP One Plus funds, and they're first generation. They can sign up for financial online education through a nonprofit called MAHA,
Mhm.
wonderful organization. They get into a program called Stash. And then depending on like the availability of funds, right now we're seeing about a $20,000 grant. A grant, let's remind ourselves, is
Right.
not paid back. It is not a loan. Okay. So that's amazing. You start layering it. Okay,
Incredible.
now we can get really fun in this season right now. Actually, today, this is so timely.
Yeah.
At 9 a.m. this morning, we had another drop from what's called the Federal Home Loan Bank of Boston. People really don't know about this one because it's so, so, so nichey. This is more federal money. So if you're a bank and you have a headquarter in Massachusetts and participate and get approved every year with Federal Home Loan Bank of Boston, you can participate from April to basically July, unless funds get exhausted, in one of three grants.
Hmm.
Okay, there's Equity Builder, Housing Our Workforce, and Lift Up. Those are 25,000, 25,000, $50,000 buckets. They're
Wow.
super small. They're never guaranteed. But imagine what it's like to get a phone call because you filled out a piece of paper that you have another 25,000.
Insane.
I
Insane.
love it. It's one of my
It's
most favorite
so
things to do.
awesome. It's so, and so just maybe to give an idea of the complexity, obviously it's complex potentially for you and sort of what you have to do in the back end. But for the client, for the realtor, how much
Yeah.
extra legwork is this?
So, what's really nice for my realtor friends, the beauty of sort of this intention and mission work is to not pass that burden on to you. Your job as a realtor, with all due respect, stay in your lane, go find the house, do the contracts. Let me do this. This is my world. So I tell people to think about an octopus for a minute with all those
Hmm.
legs. The consumer has to be the center because candidly, sometimes agencies like the city of Boston or federal home loan, they may need something directly, right, from the
Right.
consumer. I can help like a concierge, but I have to have that consumer forefront. However, we are there working that with them, helping with the documents, because that's the challenge.
Right.
Everybody out there knows paperwork, documents, it's onerous. People get confused. Why
Yeah.
do I need to send this three different times?
Right.
Candidly,
Right.
there might be three different, four different entities that are all coming together.
Right.
Because that day of closing, when everything comes to your office to close, all those monies are coming in,
It's,
and it
yeah.
has to balance out. It has to be perfect. Okay, so that's behind the scenes, handling the disclosures, handling changes. Like when my borrowers get that $25,000 surprise, that triggers a redisclosure, new documents, new loan amounts, new
Right.
type
Right.
agreement. So you sometimes are sort of duplicating some work, but with
But
all
you got,
checked,
yes.
if you
Yes.
build the efficiencies into your workflow, you're built for this. And
Yes.
that's what we love to do. We don't need
Yeah.
you to see the sausage. We'll just get it to you.
Yeah.
But you're right. So for my realtor friends, no, I don't really need you to do anything extra. I want you to be aware so you can say to someone like, oh, this doesn't dilute their offer, or, like, oh, I'm aware so I can be more knowledgeable in my community and be an expert, right?
Yeah.
I don't want you quoting guidelines, but I'd love for
Right.
people to know it's out there because that's the butterfly effect.
Sure.
How we
Exactly.
reach more people.
And would you say, like for a closing timeline? I think that's more than anything where we have the cooperation of the agents in the forefront to have the knowledge. Like my client's gonna wants to take advantage of this, but we time is not, it's
Right.
not necessarily a 20-day close,
I
right?
was literally thinking that
Yeah.
exact amount of time. So people have to be realistic. It's
Yeah.
not a 20-day. 30 is super uncomfortable.
Yeah.
Could it be done in a do or die situation if all hands were on deck? Sure. Is that the norm? Absolutely not.
Right.
I would say a 45 to 60-day window is comfortable.
Yeah.
But the truth is, let's talk for just a second about the outliers of these new construction affordable projects. Because what you see a lot of is people get into these lotteries. They get offers accepted. They start, well, they're not offers, they're reservations,
Right.
right? They get chosen. People have to understand those projects sometimes are not done
Right.
6 months to a year. We just closed someone that was in process for a year because a condo was still being built.
Right.
So we don't know that timeline. So it's
Right.
actually an interesting space because we're managing actually way longer timelines than used to what you're seeing in a market rate scenario. So if
Yeah.
you're doing a market rate, I would say that 45, 60 day is very comfortable.
Mhm.
But I want you to be very upfront with the lender that you're working with. Like, if it's not us, you need to just ask some questions.
Yeah.
You need to get on the phone, and there needs to be good communication. Sometimes in this space, we talk about the 4 C's of first-time home buyers, and they talk about credit and collateral and capital. But I always remind people communication, and
Huge.
that's that power pod effect. You,
Absolutely.
me, the realtor. Because if we're not talking and a contract comes in all messed up or something, we're putting ourselves in a bad position.
Sure.
Here's a little nuance people may not know. If you're working with the city of Boston on their programs, the borrower only needs to put 1.5% of their own money in. You may want to see a 3 or 5% escrow hold on a contract.
Right.
If they do that, the money automatically has to go in the transaction. Boston does not allow, because of certain HUD requirements on their end, for that overfunded escrow to go
To
back.
go back. Right.
You don't know that, you've got to help us redo the contract, or the buyer's going to end up putting in more money than they need to.
Right. Right.
Devil's
No,
advocate.
absolutely. And that's, I think, now, especially knowing this other program about where you're living versus where you're
Yeah.
buying, excuse me, yeah, where you're
Yeah.
living versus where you're buying. I feel like, especially, well, maybe if you want to talk a little bit about your language, your abilities in Spanish speaking clients, because obviously, we have a lot of Spanish speaking clients that I feel like is always such a great um, introduction because oftentimes they are living in the city,
Hmm.
but aren't buying in the city.
Correct.
So not only do you have that ability for some to maybe double check whatever program that they were, pre-approved for to see if there's a better option there, but I don't have to be on the phone with you translating
No.
because you have a
Right.
full service Spanish team. So if you want to talk about that too.
I would love to. So we joke all the time. So yo soy la diva del dinero, right? Everyone jokes la gringa. So I grew up speaking English and Spanish. My parents worked full time, and I had a babysitter from Ecuador from literally the day I came home. So I grew up bilingual. And as I said earlier, I learned financial Spanish early in my, profession. And through studying and learning and talking, this is exactly right. Like it is as natural for me to do a mortgage process work with a client in English as it is Spanish. what I've learned, and this is important to share with people, the experience and workflow can be different because it's not just language. We may see more technology barriers. It may not be as easy. We can't assume someone has a computer at home, right? The world is much more mobile.
Right,
And I see that make its way in, especially in my low moderate households. They may need to lean on their kid to sometimes help with printing a document or something to get everything together. What's amazing about having a bank footprint is we've got boots on the ground. So
right,
we can call in to a branch manager, a teller, sort of again, concierge that if someone has the good old box of paperwork,
right,
right?
right,
That old, but it exists. Like you have to know that. So again, to your point, we are handling the communication and the orchestration of the paperwork. My group here, we do speak Spanish, we have Portuguese, and the bank is really looking at exploring more language support. So, very realistic. If I have someone that speaks another language that I don't cover, I'm going to put my hand up and try to find someone to avoid someone being a translator because that
right.
drives me nuts.
Yeah, no, agreed, agreed. It's such a huge, I mean, and again, it's a testament to like going back to how you started. These are particular clients and loans sometimes that are just much more difficult because if you want to give them the full service, you have to take on a lot more. So I always appreciate that of you that you do it with your heart and it is like a calling for you.
And you know what I've thought about over the years, and I think a lot of us that hustle and work hard, like we know the grind. But here's
Yeah.
the thing, you don't make excuses.
No.
These were always my people that I worked with. These were my clients. I joke, I get to run around and say, I get the underdog. I get to work with people that don't have money. It's fun to
Yeah.
have the paradox of being a banker that looks for people who need more money. But if you know that you're carrying a 300-pound backpack and the person next to you is carrying 100, right? Let's be honest. Someone that has a lot of money, great credit, knows how to send you a W-2 or in a PDF, all that, I call that super easy, like vanilla kind of loan.
Right.
That workflow can take minutes.
Right.
So that loan officer might be able to stack more. However, I'm never going to say like, oh, woe is me. I'm going to learn to do that at the same speed, but with my 300-pound backpack.
Right.
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 And so that's why I'm fascinated on workflow and efficiency on the back end. It's a little academic for me because I'm fascinated by that.
Yeah.
No excuses. Because you know what? If we do a ton of these kinds of loans, we've impacted so many people. Like I don't ever say it's just me. There's a huge, amazing team behind me. But Paula on my team, who who's trilingual, she
It's
is like a
amazing.
threat. We were reflecting. We have at least five borrowers, at least, that we've called with that $25,000.
Amazing. It's amazing.
It's just so important and impactful to align yourself with these programs. Now, I want to just share. Oh, go ahead. You
I
look
just
like you
had
might.
one question
Yeah.
about, so do you often find, so I think for realtors too, to understand in some situations, because you were saying like it's a surprise,
Yep.
sometimes you're applying with a borrower who can afford it
Yep.
without.
100%.
There's
Because these are
others,
never guaranteed. This specific program, Equity Builder, Housing Our Workforce Lift Up, are never guaranteed funds. So you never do your numbers as though you get it.
and that's so that was the point. So you will never qualify a person based off
Ever.
of getting it. You're
Correct.
qualifying them based off of not having it, and then it's
Yeah.
a bonus.
Now that's that specific bucket right there.
Right,
To
right, right,
your
right.
point, if we're playing with the mass housing partnership funds, we know if they qualify, they're getting it.
Gotcha.
And now, if we talk about another bucket that's super fun to play with is mass housing.
Mhm.
If you're not aware of these products, they sound so much alike. I tell first-time home
Yeah, yeah,
buyers, forget it. You're never going to remember this. And like you just said, a layer of language ability,
yeah.
mass housing partnership, mass housing, I mean, one word difference.
Right.
So we really try to highlight that again with that bullseye moving out. Mass Housing is a local agency that offers conventional loans and FHA and some rehab. The rehab is very nichey. Not a lot of places do it. Candidly, we do not. We do offer their all conventional and FHA product suite. They, as of today, are making some adjustments. They've opened their income brackets up to include some higher income borrowers because they noticed even if we have higher income, we're still having a liquidity problem.
Right.
Everybody knows things are super expensive. It
Yeah,
just, we get it.
it is. Yeah.
Mass housing offers for low income borrowers, they have a workforce advantage. That's a deferred loan at 0%, $30,000. That's an amazing tool to work
Yeah.
with. And that product does not have PMI. So it mirrors mass housing partnership a bit.
Right.
And that's where mortgage companies will lean in, right? If their borrower fits that box, that's where they're going to lean in. However, those income limits are so low now that it's really hard to make those numbers work.
Mm,
And I want everyone to just be really careful to know this is a program where you're buying matters.
right.
So if you're a realtor showing someone different places in different counties, you really need to know that that lender knows that and has looked. We all get burned on this one. I've seen it so many times. Person thinks they're buying in like Middlesex, Suffolk, boom, they pop out to Worcester. Income limits tank. And now things can be very different. Okay, these are
So,
situations where sometimes all of a sudden you have to go into FHA because you don't have a
right.
backup. I've seen it a bunch. Now, again, mass housing, as I said, I'm going to give you these like summary. So workforce advantage is coded yellow. If they're in the yellow bucket, fantastic. You just got to watch those income limits. Those are based on household. So grandma's working but not on the loan, we need to know about that.
Mm,
Right? These are things we get into. The devil's in those details again. When you get into their next product, they're streamlining as of today, we have to look at their income bracket. They would then be eligible for $25,000 as a second mortgage. It's now at 3%, so your payment for that is $172 and I think 64 cents.
mm,
You get the money, but you're adding that in. So the
right.
ratios, you got to be careful. And we have PMI. So imagine, I hate to say this, but I'm going to go there. Imagine a situation where you think the client's in that yellow bucket, no PMI, no second mortgage payment, and you have an oopsie or they bump somewhere where they bust income. It's ugly, it's painful. The
Right.
deal may not work with PMI and a second mortgage payment. So in the industry, sort of in this space, we know there aren't a lot of backups.
Right.
And the reason I share that is because you have to do your due diligence
Oh,
that
yeah.
much more
Yeah.
at pre-approval.
Right. Right. Which is, again, I mean, for anybody who's listening, obviously your knowledge just oozes out, and like just the ability of you to be able to like think on the fly with this stuff is huge. And like that's why you're such a great partner in this.
Thank you.
Um,
I
I
love
could
it
have,
because it's all about keeping our clients out of harm's way.
right.
It's
Well, because
so
you,
funny when
okay,
you
and
think
this is
about it.
what I love about you too. And again, like just coming from a perspective of caring, I always think of my clients similarly to loan officers. You have the transactional ones. You have the transactional attorneys who also are just like, okay, let's go, let's go.
Yep.
But then you have the attorneys like how I feel like I am, where I feel like these are my children,
Right,
and you want the child to have the most incredible experience, but also keep them safe because they
right.
don't know what they don't know. And it's would be heartbreaking for them to realize from a family member who had like maybe a similar scenario that they left this potential opportunity on the table and just
Yeah.
didn't know about it.
Yeah. And it's so true. And as you said that, I couldn't help but get a little chill because, the broader context here too, if we think about generational wealth and literally trying to close the racial gap inequalities, like if we get really into these bigger systematic topics and drill it down to each and every single loan, one of the things that I think about exactly are the children in these households
Yeah.
because they're watching.
Yeah.
And I like to say they're adult. We don't know if it's a mom, a dad, a cousin. We don't know who they're watching, but it's an adult because they have to be 18 or more. If that adult has a good experience and brings that child to the new house or something, it plants a seed.
For sure.
It shows that home ownership can be done, that, hey, that's normal. And I want everyone to know too, first-time home buyers don't have to be like young. I just closed a first-time home buyer in her 60s,
I love
and
it.
she used three resources.
It's
Okay.
amazing.
Some of these nonprofits also have grants. So this woman, I'm going to be very real. I worked with her for 6 years. She was not ready. She was paycheck to paycheck. And we stuck with it. To your point, caring, nurturing, helping, answering hundreds of questions over 6 years. I'm not exaggerating. I mean, she
Yeah.
was laughing. She was laughing with me. She's
Yeah.
become a good friend. But she got her house. And like you were saying, that trend of moving from Boston outside, the reason we see that is people are chasing affordability.
Right.
What I see, the 300 to 500 band on prices, That's hard. And so you're moving out to find that, to
Right.
get your numbers to work. And guess what? She did. She found something below 400, cutest little single family for her and her adult special needs son. And look at that. She's
Amazing.
starting a new chapter. And like that's gold to me.
Oh, it's the best.
Gold.
It's the best. I love that.
Yeah.
Well, let's end on that amazing note.
Perfect.
So for all of you who are interested in learning more, please reach out to Amy. Of course, I will link her and all her information on the
And I'm
video.
happy just to answer questions. Like, I
Yeah.
hope people can get the vibe. I love this work. I'm
Yes.
passionate. I try to educate. I do a ton of nonprofit teaching. I'm not here to like step on relationships. I just want to be a resource. So if I can be helpful, please hit me up. I'm here. You'll find me everywhere. And I so appreciate the chance to talk with everyone.
Thank you, Amy. I appreciate you, and I will see you soon.
Have a great one. Bye.
Bye.